Hi, and welcome to this video, which is on the 17th of September. It's Tuesday. Just going to be looking at one of our favourite types of trade setup today. And the reason we like the trade setup we're going to look at is because it offers such a great risk to reward trading opportunity. I'm going to demonstrate it today in terms of the pair USD RUB, so US dollar against the Russian ruble. A lesser looked at pair, but you've probably got it on your trading platform. Now, in terms of whatever pair this setup appears in, it will really interest us because it will give us really good risk to reward. Now, we're normally after a risk to reward of at least 3 to 1, preferably 5 to 1 or more. And this setup fits into the latter category. Now, if you have a risk to rewards of 5 to 1, you obviously get 4 trades wrong and 1 right and still break even. And we do better than that with this trade setup. Yeah, I really like it. I'm just going to explain it when we go to the chart, which we'll do right now. But just before we do, just please do keep in mind it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and you'll get live access to our member center. Right, let's go and take a look at the trade
on the
setup.
chart of USD RUB, and in terms of this trade setup, we use it all the time. It's just really a combination of doing a simple study of sentiment and then using very simple technical analysis to time the trade. In terms of sentiment, we like to use the COT net traders positions. Regular viewers will know this. If you're unfamiliar with the tool, it's totally free. It comes from the CFTC, released each week, and it will tell you what two key groups have got in terms of their positions, actual positions in the market. Now, just to explain it briefly here, if you want to learn more about the COT, just look up our video, COT Net Traders Indicator, on our channel. But what we're looking for is speculators to oppose commercials. Commercials are the smart money, okay? So we want to see the two groups against each other. We'll just express the positions as a simple ratio. So speculators 15 to 1 in terms of their shorts over their longs, so very, very bearish. Commercials 4 to 1 in terms of longs over shorts, so bullish. Divergence between the groups 19 to 1, which is high in historical terms. We also know speculators are close to a record net short position. Now, in terms of this sell-off in the dollar, why did it occur? Just want to go down to here because you'll see it all the time. I've just called it buy the rumor, sell the fact. The US Fed is expected to cut interest rates tomorrow. So traders have sold the USD down. So the market sells off in anticipation, okay? But the event is now discounted. So if the expected event comes tomorrow, which I think it will, the Fed will cut rates by 0.25 basis points. That will see the speculators exit on stop, and you'll get a reversal to the upside. And you'll very often see that in terms of news events. Traders anticipating a really bullish news event, buy into it, then it comes out as expected, prices recoil the other way. We're looking at a bearish event here, or traders being bearish, so we expect to move to the upside. Now, in terms of the sell-off, it is actually quite a strong sell-off. So we like high volatility on a sell-off. You can tell that from the Bollinger Bands. They'll give you the volatility, just the distance between these two outer bands show you the volatility is high. When volatility is low and you're traveling sideways like here, bands are close together, volatility low. So you've had a sell-off and a high volatility. And normally, when we're looking at a big sell-off, when we get outside of this outer Bollinger Band, we're looking for a possible exhaustion when prices come back within the band. You see that happen very, very often, okay? Especially when you come into a key level, which is 64. So we go through the level, spike tail low, then we reverse back above the 64 level. It's obviously where prices held there, and then we get the breakout, okay? So that looks like an exhaustion of selling. So I'll draw that as a trajectory. You probably get the general idea of what I'm doing without me drawing the line in. But basically what it is Sorry, I need to get it straight. There we go. So basically you get the exhaustion, then this body can't get near that tail, finds support on that body, and it's blue. Okay. Now, in terms of this trade, you don't need to risk much, in my view. I would be behind the tail, which is there. Okay, so you got 3 candles there, kind of bodies hitting against that level. Then the big blue takes off. Okay, so I've used that as my stop level. Just should be back from the tail, and then you can basically look tomorrow for stops to get run, speculators to exit the market. Normally, yeah, when you sell off quite hard, you look for reversion to the mean. The mean price is the middle Bollinger Band, so you expect to move up to there. When you get really strong sell-offs, you very often go band to band. If you're unfamiliar with Bollinger Bands, you can look them up, and there's a playlist on our channel. We use them all the time, and we find them highly effective. So we think the selling's exhausted. Prices come up, and the expected event tomorrow, we expect basically the USD to move sharply to the upside. Where would you buy? If you're coming in now, you could just literally wait for a break of the high back through those 2 candle bodies, just paused beneath them. I think we'll run up to the mean price, but I think really you're going to get up towards the outer Bollinger Band. Chart highs you could have there. From my study of the sentiment fundamentals behind this pair, and the fact that speculators are just so short, we could run on to 69, which is weekly resistance. Okay, so if we go through the level after the Fed tomorrow, we'll start to gain traction to the upside. You get a nice blue, the stops will get hit, and you should see really good follow through to the upside. It's a very simple trade setup. If you look at our weekly Forex forecast, we'll use it all the time. I picked out USD rub today because I think it looks a nice trade, but we'll do it in majors as well. Whenever we see the trade setup, a strong sell-off here, you have speculators, heavily short, and price action steady before a discounted news event, that will give us a bullish stance in this case, and obviously we'll use it the other way round if prices run too far to the upside. A simple trade setup, but it's always got good risk to reward on it, and looking for higher prices in the USD and a stop hit to occur. So we'll see how this one goes. Thank you very much for watching this video. Take care. Have a good day.